Hey everyone, sorry for the late start. Lots to talk about tonight. Crazy day. Yeah, sound is good, right folks? Welcome everyone to the Kendall Report. I'm Bob Kendall. Late start tonight. I already hate the schedule, so I'm not sure. I don't want to jack up everything we have going, but I do need that information from the database, and I'm so glad I've got it tonight. But I've got to figure out something. I am a person of rhythm, and I talk about that all the time, doing the same thing especially around the market. So this has really messed up my rhythm tonight. So anyway, thanks for being patient, and I do want to start a little bit later for sure. Not exactly this late, so we'll definitely get things going sooner. So massive, what a rally yesterday. I came up and did a live stream, and it was virtually, I mean, I'm not sure anything didn't get touched yesterday. And I made the analogy that it's like watching, an old cowboy movie when they take the herd of cattle right through town, a stampede right through the middle of town. It just, you get in the way, you get killed. That's how it was today. But most of the action was the first couple hours where it just jacked the market up, basically went sideways for the rest of the day. The algos were in control as always, but this was a massive rally. I mean, I know everybody knows that, S&P up 2.07, Nasdaq up 3.03, Russell up 2.28. And all 11 sectors up. There was nothing that didn't get touched. All the meme stocks, you name it, everything is up. So I'll go through the details here in a minute. But we had, from a database viewpoint, a massive turnaround here. And when I reveal this, it's those of you that have WaveTech already know that number. So it's pretty outstanding. So I'll keep you on waiting just for a minute. But as far as things go, it looks like this reversal is going to be absolutely real, especially because of the database and other things that have happened. But we continue to see things. I have to just some retrospect here. And since we go back to really around March last year in the collapse, but around March 23rd, 26th, some of the stuff that we saw there from the standpoint in the database and the traction that we got almost immediately was amazing. And I've been talking about the intermediate trends are still positive, the secular trends are still positive, and didn't think we would get much of a rally. We still could stall up here, but it looks to me that some things have changed, literally have flipped the script, and there's, I guess, the configuration of how the markets have been, I've changed a little bit. Some things are coming back in the line. Some things are different. And that's what I want to try to address tonight. So just a quick comment here. Tomorrow's live trading room is probably going to be focused on, hopefully we'll get some volatility on trading, some trade setups and things I want to do. So if you haven't joined that, you can go to kendallreport.com/trade. There was a number of people signed up earlier today from the live stream. Look forward to having the new people on board. But man, what a day. Let's dig into the database here since I already have that, and so I can show you exactly what's going on. It's interesting. I always have my notes, and there is virtually no notes tonight because nothing really happened. No news, no nothing as far as that goes. So we'll take a look here, and let's go to the database. I'll zoom in and get ready for this. 4,314 buy signals all in one day. We had a positive ratio last night. The rotation was positive. I didn't get to do much about that. We had to post it on Twitter because it took so long for the database to get updated on these big days. I don't know if it's errors or what kind of thing slows up our data vendor getting the data out, but we started looking for data really early, and we just pinged the servers looking for all of the data that we get every day. But this is huge. 4,314 buy signals, 204 sell signals, about a 20-to-1 ratio, actually better than that as far as the buys. You'll see in this little box here. It says bullish, bullish. I would say, yeah, 25.36 to 1 on this 3.2 model. And by the way, the 3.2 model is the one that typically will kick in later. So that this is a pretty interesting situation. Try to be able to dig through some of this stuff by the time we get into the live trading room tomorrow. But this is huge. All of a sudden, everything looked gloom and doom. We traded down to major support at that 44.90 level, bounced off of there, and then in 3 days, we went from, actually, let's go back 6 days. In the last 6 days, we went from super negative to all of a sudden back bullish. Maybe there's another whipsaw in order, but I don't think so. And this is a big number. So, I always talk about the 42% bullish number. Well, here we are, 45.99 just in 1 day. So what will be interesting is to see if we get some traction on the intermediate database. That's Friday. It's a little early. We're coming into Wednesday midweek, but this is a big deal. And you don't see many of these, and when you do, these are big flips of the database that come in, and they really start to, they are the beginning of something, because typically these signals that just came out will last 30 to 45 days on general. So it's short term, but we can get a lot of rotation. And there's still, another 30 or 40% if we decided to get really bullish would come back in. And we saw some things on the indexes happen. Like I said, some things are somewhat back to where they were. Other things are different than they were. So the deck got reshuffled here. And that's pretty huge from that standpoint. Bear with me 1 second. So let's go ahead and get into the charts, see what everything's looking like. I have an hourly chart here of this is the SPX. There was a high level cycle come in, but I want to show you something. This is crazy. This is a 1 hour chart. You get new Fibonacci projections out of this, 48.27. We're most likely going to, whether it happens this week or just goes vertical here, we're going to see a move back to the all-time new high, just like that. I was convinced that we would see this sideways range. We still may stay in the sideways range. And some of the risks that are out there right now is that we print up into an all-time high. Let me get over to the daily here just so we can get those numbers out there. That reversal high was 47.40 on the E-minis or the futures. We're not far from there. We're up 16 handles right now. We're up 55 handles, no problem. We saw another, 100+ handle day again in the S&P. So the volatility is completely ratcheted up. We look at the market grid for yesterday. Let me put that on screen so you can see some of the details here. 46.84 was RXT, so we did get an RXT sell signal. Probably stay within the range. We'll most likely stay above 46. That would be the extreme. We look at the market grid 61, 46.61. If you were in on the live stream earlier today on the futures, 46.60 was a key pivot number. We traded down to 67. And the last 12 minutes, we saw it go from 60, 67, basically all the way back to the highs of 92. So a 30 handle run. We've seen that 3 times in the last 3 days, where the last 12 minutes, it's just a jihad going with everybody buying again. So, like I said, a lot of cash flow, looked like a stampede of a sort to me. And that type of action, I think we live in a different world now. And most people are too busy looking at old statistics, looking in a rearview mirror. And, the nice thing that keeps me in line, and I mentioned this on the live stream earlier today, is that I have these metrics and these models to respond to this stuff. Now, if we didn't get much of a response, you'd hear something really different from me. And I really am going to figure out the best time for us to start this nightly show. I've been jacking around with the start times for a while. We've been pretty consistent, but I just need that database view to be able to do analysis, because it all ties it together. And without it, we're trying to, I thought to myself when I was getting ready tonight, what would I be saying if I didn't know there were 4,000 buys? What would I look at this and say? And I need to know that, because this is the entire essence of this channel, of what I do, the work I do, all of that. And without that, it's not who I am. So I've always had that available, and this stupid time change where we don't change our clocks has jacked it up. So I will figure the optimum time to start so I can have this data. It will be probably an hour later than we've been doing it. I'm going to target closer to 9 o'clock Eastern time instead of starting at 8 o'clock. So we're going to move it up. Some of you are going to be happy about that, but it's just, without this stuff, it doesn't make the analytics and my view of what's going on as authentic from my viewpoint. So it's really been compromising. I've had a couple of days that I felt really compromised because of just not knowing that data point. But here we are, 17 handles, 4702, 403 prints. What's the high so far tonight? 0450. So we're just looking at this thing continuing on. S&P wants to go up. We look at the market grid for today. Broad ranges. And, I've been talking about the volatility monster. Well, volatility monster still exists. We look at the ranges that are being projected each day. So for right now, high low 47.86. Matter of fact, R2 is basically a retest of the all-time high. S1 R2 would be a minimal day. Maybe with the RTXL, maybe we flatten out here for a day or two, but it does look like we're going to be seeing some all-time new highs. Look at the PPMs. We went from being negative to penetrating on PPM 1, the first and second derivative. PPM 2 is through its second derivative, and PPM 3 is accelerated. I talked about that last night, that the underlying trend was starting to accelerate. So, and also, if you recall, I've been talking about this bubble that exists. Those usually happen at lows. So I knew we were close to a low from the magnitude of this move. I don't know how you could have estimated that. I showed on the live stream today, had an hourly trade that came in 45.85 or something like that, and it's still long, that trade. But I think we'll see, like I said, at least our, let me get here real quick. R1 4709, basically done that already. So R2, if we get close to R2, there's no way the algos are going to stop there. They're going to run to new highs, and then we'll find out a little bit more about the character of the market and whether we're just in this explosive move to the upside and we're going right straight to new highs. And we start talking about, all of a sudden we're talking about 50. You can see these numbers up on the far right-hand side of the screen. Let me zoom in so you can see this just a little bit. If you look at these numbers, 5,077 is that Fibonacci target that's still laying out there. It goes back to that 5,070, 5,100. All of a sudden, those numbers are back in play. And, maybe it looks like Santa Claus is coming, and I'm going with our models. I always do. There's a lot of portfolios with buy signals for today that are on the daily models. And once again, what I was talking about from the standpoint of the database is that we had this refreshed database, right? So this was the big deal for me is, oh, good, we're going to get an opportunity to see the database start to get some traction, see what comes in and all that. I'm going to flip back to the database just for a second here, because one of the things I want to see is what's interesting, there's no new sector buys yet. So it's going to take a few days for us to get to that level. So there's no new sector buys. So that's not really that discouraging. It takes a few days to turn this entire basket of stocks. So when you're trying to turn a basket of stocks around, that takes much more structure from that standpoint. Let's go over to, oh, before we do that, like I said, probably R2, 47.37, but I think that it's going to run beyond that if we get up there. We look at R2, 47.36, R3, 46.62. All of a sudden, RXT, 47.86. Can this explosive vertical move continue? It's very possible. I mean, this is pretty bizarre. I showed you the S&P the other day when we were looking at things, and what was amazing about that, sorry, just trying to get into a flow here. What was amazing about the S&P, when we looked at how many stocks, 68% was still invested in the S&P. There were about half the S&P, roughly 238 symbols were still long out of the 500. And I was amazed because when you look at the database, you see intermediate database, and those were intermediate signals, were blown out down to 28%. You would have thought that would have been much less as far as the numbers, more cash on the books. But that is a broad-based portfolio. We run all 500 stocks inside, doing every model, allocating every symbol, all of that stuff that you and I as humans can never do. And it's still 68% invested, which was really, really impressive. And even some of the longer term signals that we have are in there as well, even on the indexes. But the pattern that we're seeing here, I don't know, maybe this is a classic meme, to the moon. Tomorrow's going to be very interesting. And like I said, there's no news this week, really. CPI on Friday, but that's it. And we're coming in really to the last 2 weeks of the real market. We'll go into holiday markets after that. There'll be a couple days to watch, but for the most part, this next 2 weeks is where the money's going to be made here. All right, let's go to Nasdaq, which was insane. It's up another 0.5. It also got an RTX sell signal. Typically what that means is you hang S1 2002, 16,202. Last trade, 16,398. So the minimum S1 is 16,202, R2 15,563. We're almost R2 on the Nasdaq already. So we could see R3 there, 16,693. There's a lot of momentum behind this, folks. And just looking at all of a sudden how these things flipped like they did. And these targets that I talked about a while back, we were talking about 17.9, let's call it 18,000. Those are back in play as well now. And what is the all-time high? All-time high was 16,667. So we're 250 points away from that. And like I said, if they get above that, it could be a big run. We could have the total melt up kind of syndrome. I know I'm kind of flowing from what happened yesterday, but what's triggering me into this bullishness is what happened on the database. Don't see those flips very often, and they tend to come in bunches when they happen. So we could see it go from where it's at right now to this 45.99. We could see it go from there all the way up to 52, 58% very quickly. And if that happens, now we've got a broad-based short-term rally, and we still have a lot of symbols on the database is still long on the intermediate, even though we're down at 28%. The symbols that are long are, for the most part, those stronger symbols out there, and we'll start to see another rotation back in. Yeah, buy the dippers were right again. I agree. It was absolutely the buy the dip. But it really had a lot to do. Let's talk about this just for a minute before I move on. It really had a lot to do with this phony virus thing that they floated out there. And, what I'm seeing, this Omnicon, as I call it, it was immediately never going to be material. But the media, the government, they have Omnicon travel restrictions right now. What's that about? What is that about? So it's any reason to do these things, and I can't go there, but I'll just tell you that this is not normal. There's nothing worse. I saw a story. I'm just going to say this because I saw a story that the news media outlets, major news outlets, met with the White House to talk about how they're going to report the Omnicon. Think about that for a minute. That's actually state media. That's absolutely crazy if that happened. Now, it seemed to be from a legitimate source, and matter of fact, the source was probably somebody that was at that meeting. And when you see that kind of stuff, it's absolutely mind-boggling in the world that we live in. So basically, we could see something like we haven't seen since last year. I was talking about how I just want to go on because this is a big event tonight, folks. I was talking about how things were setting up. We're getting all this selling like we did in January 20. Well, we didn't get one of these until after the large decline, right? When we had the reversal back around March 23rd is the date that just goes through my head. That was when I know we got another block of trades like this. I think we got closer to 5,000 signals on the 23rd of March to buy. And that was it, right? So, I know we're at a different level, but it's going to be interesting to see if we do get some kind of crazy moonshot here. And yeah, I'm stuck in this loop, folks, because I'm looking at everything. That database has convinced me of a lot from the standpoint of the pure number of symbols that are coming in. We see another positive rotation tomorrow night, and market just stays stable to up. It won't have to be another big market move to get the database to rotate back in. I know I'm kind of stuck in a loop. I'll get out of it here in a minute. We'll get through the rest of these indices, but this is big stuff. So let's go ahead and go to the. Let me do one more thing. I just want to flash over to the weekly chart here for a second. I won't zoom in on it. Yeah. So all of a sudden, look at this. 16,465 is RTX weekly. So we've, in an expanded range over the last 3 weeks, we've got a huge reversal on the upside, and we're trading at the RTX level. So we're somewhat at an extreme, just stabilized from here. There was something else I need to back up for a second on the S&P. I was talking about that outside reversal bar on the S&P. The criteria was you couldn't take out last week's high. They did that today. Okay, so that downward reversal was negated on the rally today. So all of those bets are off. But right here, this is your mat. 16,465 is RTX. So keep that in mind. But look at the PPMs. Now that I have them up there, let me zoom out so we can all see that a little better. But the PPMs are all turned up. PPM 1.05 positive, and I was just talking about this number the other day, the 10-period moving average being the demand line, 15,841. We went down to 15,559. We traded just below that. 15,506 was the 21, and all these had these very strong, high-level probabilities for those numbers to hold, and we bounced off of that much bigger. Thought we would hold it. Didn't think we'd see this kind of reversal for sure. So the fact that we've traded like we have for the last 3 sessions doesn't mean you missed anything either, as far as I'm concerned. I know I'm flipping the script. Went from being reasonably cautious with still longer-term intermediate trends in place to now here we are screaming bull. Yeah, so I see Brian making a comment. It's very true. Sometimes you get some crazy stuff, especially on a short-term database. We'll get some flipping around, but for the most part, you're getting more good than bad, and that's why I'm really when I saw this number when it came out, it was like a lotto ticket. It was like a winning lotto ticket. It's how you light up with it. So. Let's go ahead and take a look at Russell. Let me get over to the daily because one of the things that happened yesterday, I talked about this, we actually got above the 200-day moving average. And just in last night's video, I was talking about getting back to that 200-day, which is 2258, 2253 close. We went up to 2271. So here we are just like that. Over there, we're going to get the crossover of the 21 and the 40-period moving average, which is a bullish cross. And that's going to set up a more structure for bottom. Now the 10-period moving average, 2231, is going to be support here on the daily. And PPMs went from just flipped really, really big. We still need PPM 2 and 3 to click in, but they are actually signaling that there will be resistance around 2315 or so, something in that range. But we should continue this bottom, and this had the bigger of the volatility bubbles that I get. And I pointed these out before. I'm just going to do this very quickly because these are things to watch for on when you have the. I'll just draw some arrows here. You get these big volatility, what I call them volatility bursts. And this was this is the biggest one we've had that I have on the screen this year. And for the most part, the Russell's been in this sideways zone. So we're going to see this move up into this 2315 level, which is right here at these moving averages. That will be your next challenge. But overall, what's happening, and I talk about this a lot in the live room, is you want to trade off of structure. Well, there's plenty of structure here. There's about 6 bars in this structure. So, and you got the market grid just turning straight up here. So that is another positive. We'll take a look at the grid. This is the cash. So S1 2237 and R1 minimum 2269, 2287. That's going to move us back above that 2258 level. So we're likely to get over the 200-day. Right now, our RTY is trading up 1050, 2264. So we're right above that number right now. Let's put the futures up for just a second. Yeah, you can see the futures actually closed right on it yesterday. We're looking at 2251, close 2253, and now we're following through just a little bit. There's something else. I'm glad I brought up the futures. You'll see these three dots here. There's some new upward projections, 2348, 2429, 2479. So this probably sets up like the IWM, the small cap ETF, some of these as a pretty good trade here as well. Yeah, we're going to get to the yield curve. What's interesting, I'm going to put the spread up for just a second here, the Russell versus Nasdaq, and it downticked. Still got, let's face it, Nasdaq's the leader. That leadership's going to continue in spite of some reversal of some sort of the 10-year. I covered that in earlier live stream earlier today. They're probably, regardless of what happens tomorrow, because we have the live trading room, we're in there from 1 to 4 on Wednesday, so I won't likely be doing any kind of live streams intraday tomorrow. Let's take a look at a couple things here. Let's come back. This is midstream, so what I'm going to do is we're going to go through treasuries, look at the yield curve. There's some things happening there. There's still some, I think I'm the only one that's concerned about this at the moment, and I'm going to continue to keep my eye on some things that are going on there. But we'll do the 10-year crude oil, and then we'll do gold and Bitcoin. I'll probably come up at the end and I'll talk about some of these different things that I see and what's changed and what's rotating and the complexion of the structure of the markets changed. Just by this one story that came out on this whole Omicron thing has changed and shifted the markets. And I talked about that. It looked like a really negative shift that was going on. And as soon as it was discovered that this thing wasn't going to do anything ever, even though the South Africans told us it was very mild and they weren't getting, it was spreading, but it wasn't, nobody was getting really sick from it. Boy, they ran with that story, didn't they? I mean, immediately, I think the next day, Biden threw on, travel restrictions from 6 countries and all that stuff, and it was bizarre, actually, to see. We went from, I think in 24 hours, from finding out about this thing to world panic. So that just kind of tells you the state of our world right now and how sensitive it is and how fear can get in very quickly, including in the markets and everything else. So, all right, so let's get into the crude oil here. I'm sorry, the 10-year. So the 10-year moved back to 148. I was just looking at the current quote on it. Let me get you current quote, 146.1. So it's down a little bit. And one of the reasons why it is down is this 10-period moving average is right at that level right now. We're looking at 1.49. It's dropping about 1 basis point per day, so 1.48. So that's going to be right where you're going to hit resistance. If we stabilize, right now the ppm1 is down 0.96, and that suggests there's only about a 10% probability for the yields to go above that 148 number, right where we closed today. So we should see some backfilling. We already are overnight trading 146, as I just said. So we're looking at a little backfilling, nothing big, but there's probably 3 days of stability on a daily. We'll start to flip this ppm1, and then we're going to be in position to move up into 152, 154. I still don't see markets getting much above those levels right now. And I'll cover this in more detail. So there's something else I talked to you about. I told you to watch what I'm putting up on the screen right now. I'm going to put the hourly graph up just so you can get a feel for this. Let me go full screen. So this is just an hourly graph of this 13-week T-bill. We went out at 0.58. Watch this tomorrow. If the Fed doesn't get it back under 0.5, then that's going to be concerning because this is still the yield curve flattening. So that big rant I went on Friday and all those things are still happening on the backdrop of all this craziness that we're seeing with the markets exploding to the upside. So like I said, this isn't a mainstream concept or idea. Whether it ends up to be material or not, we'll find out over time. But we go over to the yield curve and you'll see what I'm talking about here. This is the 1030. They continue to flatten. They're at 0.316 right now. This just keeps going down and getting closer and closer. So I talked about this the other night. To buy a 30-year security over a 10, you're getting 31 basis points is all. If we go over and take a look at the 530 here, the 530 trying to bend a little bit, 0.539. We're right into this range where we got to, I'm just trying to find the number. So this is 3.6. We were at, we're at 0.16. So we've got a ways to go from that standpoint of getting down below that level. Hang on. That was, that's 2020. So that's a big number on this spread. If we go, I just want to go back to the 1030. This was the 1030. If we go back to February 21st, it was at let's just see here, 0.19. So we are down to right now we're down at 0.34. That was 1.19. So we're up quite a bit. This is a substantial move down below this level here, which was the 2020 lows. This was a steepener they put in place. And now with this inversion in the yield curve happening, there's still reason to be aware of this, to see what is coming on. And the Fed still has some opportunity. I was shocked to see that 13-week trade up at 58. So be watching that tomorrow. Yeah, I see a comment that treasuries are obsolete. Treasuries are the largest trading market on the planet, only next to currency. So no, as long as there's all these sovereign debt out there, they trade in probably 3 hours more value than all of the crypto markets added together. So, you're looking at a $30 trillion debt here, and I think it's $300 trillion on the planet. So there's a lot of sovereign debt. They're not obsolete. But the point is this spread is significant from the standpoint of what's happening internally with the banking system, but the banks aren't even lending anymore. The loan to deposit ratios are like 200%. That's crazy. They really haven't increased much. Everybody's still hoarding cash. I guess they took a lot of that and put it into the stock market. So if there's some reason to believe that the markets are going to just do a complete flip here, which I'm becoming very, very convinced that that's going to happen. What we're going to find out maybe in the next 2 days before Friday, what we're going to find out is if we do print an all-time high, whether you get a follow-through or not. And anybody that's been around the markets just a little bit when you have a previous high, and if you don't get follow through, if it trades up above there and then reverses and closes lower, that will be a, we'll call it an oh shit moment. Maybe this thing's going to fail here. You probably get 2 days to get above there and stay above there. So I'll be watching that pretty closely. I'll be live in the trading room on Wednesday and Thursday. So on Friday, we're actually talking about making doing another day there, which I will let everybody know tomorrow, because I've got a holiday coming up for the holidays. I'm going to be, for the most part, not available after around the week of the 20th, I think. So I'll be off until toward the end of the year. So I'll let you all know about that schedule as we get there. So let's go ahead and now go to crude oil. And this is 60-minute crude. Let me get over to daily. And one of the things I've been discussing here is that we're going to get back to around 72. Well, we already did that, right? We did that. Yesterday's high printed 73.03, and the 10-period moving average is still declining in this pattern, and it's still minus 0.94. So markets are going to try to move back toward that level. That's around 70. A little bit of negative tonight, but the 200-day is right at, let me bring this on screen, and I'll go full screen so you can see this. The 10 is right now 69.44. It is declining right now, about 50 cents per day. So I'm sorry, hang on. Yeah, about 60 cents per day. So that'll be closer to 68 handle. So that will be what we're going to get is a crossover of the 10 and 200 day. 200 day is also good support at the 68.09. So I've been talking about that 68 handle being a very important level. So let's probably look for a pullback. Worst case, a sideways range between the 10 and the 21, which would be around 69 even, maybe 68.90 to around 74.30 or something like that. We should stay within that range. I don't see us getting back below that 200-day moving average in this pattern. Just take a quick look at the weekly because I'm trying to get all this updated. So weekly, we rebounded back above the 40 as I thought we would. The 40 and the 21 should be the range. 72.39 is the 21 week. 68.45 is the 40. So that's the same range I just set up when we were looking at the daily. So we're going to call it 68.50, 72.39. We should stay right between those numbers here for the next several days. PPMs are trying to turn up, which likely will set up a pattern that will move a bit higher in this pattern, but there's still going to be a lot of resistance overhead around 74 to 76. So this is going to get stuck here for a while. This is one of the things that has changed. We went from this rising bull market to now a corrective pattern, and there's some questions about what's going on the monthly chart. I'll cover that as we go through the rest of the week. I'll move back into that and do that analysis at that time. Back to the gold. Same old story, really not a lot to cover here. Just want to touch on it. 1802, 1801, those are the numbers that need to get above. We're 1790, printed up to 9160. Those are still numbers as a weekly chart, but look at this. Excuse me. PPM 3 is accelerating here, which is telling us that the 40-period moving average is trying to turn up. So markets should start to move back above 1800, and then we'll see the possibility moving into some of these Fibonacci targets. Yeah, nice. Here's one of those bubble patterns I talked about, the volatility bubble where lows will set up around. You can see them over here. I'm just going to draw these in because these are patterns that I want you folks to be recognizing. And one of the frustrations, we were hoping to have the PPMs rolled out on TradingView for all the live room stuff. There's a bit of a hang up. One of our members is down with COVID, and I just haven't been able to get through some of the technical stuff. But these patterns right here are where, when we see these I call them volatility bubbles, that's where the lows will, I'm over here on the left-hand side of the screen, that's where these lows will set up. Another one right here with that flash crash low that we had. But we're getting another one, and most likely we're going to head to this, back toward this 1855, 1891 targets that were out there not that long ago. If you tuned in to the broadcast earlier, I was talking about that Bitcoin I thought could get up to about 52 handle. We got 51,977. Still a lot of work to do here. There's a lot of negativity in this market yet, so there's some work to be done. If we can stay above the 200, which is at the 47,193, if we can stay above that level and stabilize for another couple of days, then we have a shot of trading back into some of these moving averages. But right now, 54,305 is the 10. It's going down about 1,000 per day literally in about an hour and a half. This will update, and we'll have resistance closer to 53. And until this downward momentum blows off, it's going to be 52. So there's going to be some vulnerability to the market taking out this 200-day moving average. So I don't think this is very safe to be. If you're trading in here, you're fine to trade, but that's going to be an issue. We go back to the weekly chart, then I'm going to go finally down to the hourly chart. There's still one positive pattern, 51,727. PPM 1 or 2 is at 1.77. So there's a couple areas of support here. 49,046. 51,724 is probably where we're going to stay between those two numbers, at least for the near future, next couple of days. And then ultimately, we could start to move up into maybe R2, R3, but there's a lot of work to be done here before the stabilization comes in. But the PPMs on the weekly are still positive. I'm going to flip over to the daily. I'm sorry, to the hourly. And this is pretty tight. Let me see if I can blow this up just a little bit. We can get a little better pattern here. So we look at this pattern here. The PPMs are trying to turn up. There's just a lot of resistance here, 50, 51. There are some, one of the things that I've been noticing, we've been getting numerous cycles come in during this pattern. Let me draw these in so you can see what I'm talking about here. So you see some cycles just hit, get a little reversal, but we came back in. Here's some cycles. All of these cycles, there's a lot of them. This is hourly. So we've been getting a lot of these cycles through here. And typically when we get clusters like this, there is some sort of bottom trying to set up. But there's, like I said, the daily suggests there's a fair amount of vulnerability to get back below that 200. So those numbers I just talked about will be critical. So folks, that'll do it. Sorry again for the late start. I'll get a schedule around this database. As I said earlier, it's really critical for me to have some sort of, I need that data to do my analysis. It's the crux of who I am, and that database guides me. There's an interesting thing about the database. I obviously am the creator of the WaveTech models, all of that stuff. These things go back to the mid-'80s. And the reason why that's just what I've been doing for 30 plus years, 35 plus years, almost 40 years with WaveTech. So just short of that. So I've been doing this for 42 years. So that's what this is all about. And every signal in the database, whether it's daily, weekly, or on Portfolio Expert, we even have monthly signals. We have secular chart signals. All of those are based on my concept. So it's amazing that I can tell you what's going on with my ideas and concepts on 16,400 symbols. That's why I talk about the database every night. This is why all this stuff is important. And those of you who've been hanging around for the last couple of years know that, sometimes there's a little bit of a lag, but once we get the traction, I mean, people were telling me I was completely crazy a year ago. I put out a new Fibonacci target, 4605. And that seemed like a ridiculous number last year. I think the markets were 36 or 7. 4605 seemed pretty ridiculous, but that came out of the database. We started to get a lot of weekly signals. That's when they came in, October, November, and some in December. So we were just getting new intermediate buys a year ago. And those signals usually last for a year. So now what we're seeing, just to finalize everything I'm talking about tonight, what we're seeing now is we're rotating out. We're back to 28%. So a lot of those symbols have rotated out. Now we're looking for new signals that are likely to last for 200 to 240 sessions. So that's the better part of another year out. So, it doesn't mean it has to happen that way, but typically that rotation happens, and the daily database will go from where it was down to 22%, get traction. It will roll over and rotate, and then it will come back in again. And meanwhile, the intermediates are continuing to see these trends unfold. So we're potentially starting a whole new cycle right here. I know that just sounds as crazy as it can be. I've been excited that the database liquidated. I was hoping we'd get more action down the 45 handle or below, and that would give us an opportunity to really reset the market. Well, that was it. The reset was 3 days, and we've been seeing this type of action for a while. So let me tell you what, in my mind, what has changed and hasn't, and still, obviously, the trends in the equities are right back into where they were. If you look at what I talked about tonight, the interest rate cycle has been broken a little bit. As far as the inflation, I've been going on about that. I see the inflation cycle interrupted for the moment. A lot of metrics are trying to come back in, but it's just like the crude oil. We went to 66, now we're back at 72, and we're not going back to 84 for a while. Who knows, maybe ever. Maybe it just stalls and we roll over, but I think we will see some reemergence of trends there. But for now, crude oil's been broken. The Baltic index, you go to the shipping indexes, all of the stuff they're talking about, supply chain interruptions and stuff. That's just a story, I think, around earnings at the moment, because I think a lot of things have cleaned up quite a bit from what I've been able to research a bit. And if you just look at the prices of a bunch of these shipping indexes, that'll tell you that same story. They're starting to increase a little bit again, but they collapsed. They went, dropped 40 and 50% of what they were. So all of those things that everybody is worried about has changed. And the shipping indexes were already declining. It wasn't about this little scam that we got pulled on as far as this new virus variant. There's 200 variants out there, so they can keep playing this game, I guess, anytime they want to try to reset the market. There's always one more scary than the other. And, I won't go into, there's some really interesting doctrines around scaring the populace and what you can do around that. So there's a lot of things going on. We are all aware of these things. And all we're trying to do here from a market standpoint is be able to make sense of the ebbs and flows of all these things. So hopefully you enjoyed this broadcast tonight. If you did, like the video, subscribe. We're like 200 people from 30,000 subscribers. So, just subscribe. Let's get that thing over 30,000. And, once again, you want to find out more about the trading room, it's kindlereport.com/trade. and we're doing a lot of interesting work there. This is our next week will be our first month of having that room. So there's a lot of things still being developed. It's being developed by the community as much as myself. So it's been a lot of fun. We've already got some really core group of folks. So anyway, come hang out with us. I will see you tomorrow, those folks in the live room at 1:30, and everybody else, I'll see you tomorrow night. I will put out on Twitter what time it will be, so you can follow me at Twitter. It's at Portfolio Expert, and there's no E in expert, just the Expert, P-E-R-T, and that'll get you to my Twitter handle. And go ahead and make sure you follow me there, so I'll announce the show. I'll get this tuned in because I need that data. Thanks again for watching. I appreciate everybody coming, and we'll see you at 1 o'clock on the live room Eastern time, and then we'll see you tomorrow night. And like I said, probably I'm going to push it around 9 o'clock. I think everything will be ready. All right, see you then.